sorry. The sign-in sheet. And James, I'm sure you do a lot of Zoom calls as well, so
That's the day to day.
That's the day to day. Okay, good, because I've done hundreds of these. The sign-in sheet.
Hey, I think I'm gonna admit everyone and we'll get
And
started.
James, I'm sure you do a lot of Zoom calls as well, so
That's the day to day.
that's the day to day. Okay, good. We have an echo. We have a delay coming. Don't let everyone in yet. Do you guys hear the delay?
There is a delay. It was from my mic because I have the live stream open. So if anybody has the live stream open, please just mute it. I'm just gonna close the tab, but yeah.
Is that it? Okay, great.
That was the
Thanks for
problem.
checking. I appreciate it.
Of course. Okay, I'm gonna let everybody in and we'll get started.
Okay,
All good?
Well, thank you.
Okay.
Hey, hello and welcome everybody. This is our business lecture series featuring our guest speaker, Mr. James Shecter. My name is Nicole Krajin. I'm the president of GCC's Business Club. And I'm just going to tell you guys a little bit about our club before we begin. So our main purpose is to help students like you with networking and to connect you with job and internship opportunities with the goal of opening up different career paths in business. So in the past, we've hosted various events like club mixers, pitch fest competitions, and guest speakers featuring GCC alumni who've gone on to become very successful. So for example, last semester we hosted Startup Boost Day, which was our hackathon with a venture capital firm here in Los Angeles, SmartGate VC with Hero House Accelerator. We've also hosted another business lecture series last semester on business in the entertainment industry. So if you are interested in joining Business Club, please just send me your name, GCC ID number, and your GCC student email address, and I will add you to our email list to stay updated on all our events. Also follow our Instagram at businessgcc to also find out more about events. And now I will pass it on to Andre, our chairman.
Thank you, Nicole. Yes, I speak for all of our cabinet and all of our members when I express our gratitude for our amazing advisors, our Venture faculty, and our passionate, dedicated members, as well as a huge thank you to James, Mr. Shecter, for joining us today. So thank you all of you that have made it here. Today we'll be discussing venture capital and private equity, two flagship disciplines in the field of finance. Here at the Business Club, we have many members with genuine aspirations in pursuing a career in the financial services sector. And as community college students, we often feel that we lack the resources and support system to propel our goals. Although there is no greater opportunity than the one presented today, as we will be immersing ourselves in an enriching lecture and gaining valuable insights from a leading expert in the field. We'll be going over career pathways in finance, the recruiting process, and the philosophy utilized by excelling buy-side institutions. Thank you so much for joining us, everyone. I will now pass it on to our lovely advisor to introduce our guest speaker.
Thank you, Nicole and Andre. Hello, everyone, and welcome to the semi-annual Business Lecture Series, Private Equity and Venture Capital 101, presented by the Business Division and powered by the GCC Business Club. My name is Sophia Poseidon, and I'm an instructor in the Business Division at Glendale Community College. Thank you all for taking the time to join us today. Please note that attendance sign-in will be posted in the chat at 1:10 p.m. That's 10 minutes after the hour. Flex is available in the VRC for faculty, and questions for our guest speaker can be sent to Raj Kapoor in the chat. Raj Kapoor, if you have any questions. Today, our guest speaker will touch on the fundamentals of private equity and venture capital and outline ways you can prepare to participate in entrepreneurial endeavors specific to venture capital. It is with great pleasure I introduce our special guest speaker, Mr. James Shecter, Senior Associate at Fika Ventures. Welcome, Mr. Shecter, and thank you for joining us today. Let's begin by finding out a little bit more about you. Maybe you can tell us a little bit about yourself.
Sure thing. So happy to join this. And I see we got over 80 participants here. So a lot of hungry minds, and hopefully I can be at all useful in this because it's a very challenging career to get into. And I'm early in my career in it. So hopefully this is a worthwhile exchange for all of us. And I appreciate the enthusiasm and you all for hosting me. So yeah, I'm in my first year here at this firm, Fika Ventures. 28 years old, so I've been working in private equity and venture for the better part of the past decade. It's been 6 years now plus. I grew up in Philadelphia, so I'm a recent coastal transplant. I just moved out here last year for the first time, though. Starting with the COVID years, I spent increasing amounts of time here because all of my friends just had so much more fun in the LA area than those in New York, where I was previously, partly due to weather, partly due to the jobs that we were in, but coming out here and working in startup land has been such a rewarding experience. I went to Harvard College for undergrad. My first job out of college was working in investment banking at Citibank, which was in New York. That was a very tumultuous and intense job, but one that I'm very glad to have done, and we can get into that more. I then spent 3 years at a private equity firm called Lee Equity Partners, which is a middle market private equity, meaning we're investing in businesses that are a couple $100 million in valuation, and we try to take them to the next level of $1 billion plus. And I spent a lot of time in business services, healthcare services, insurance while working there, some aerospace and defense. So pretty sector generalist during that experience. And that theme has continued as I went on to get my MBA back in my hometown of Philly at the University of Pennsylvania's Wharton School, which was a lovely 2-year experience, especially being back at home near family and building the network that comes with the MBA. And I just joined this team, like I said, last year full time. So Fika Ventures, we're based here in Los Angeles in Culver City. We're seed stage investors, which is very early in the company's life cycle. So much earlier compared to the private equity that I was doing before, which is like mature, stable, growing businesses. This is basically just a couple people and an idea in many cases. So maybe they've got a couple customers, maybe they've got a product, but it's basically as early as it gets from an investing standpoint. So it's been a really fun exercise to make the reads on people, which is really all you have when you're making decisions here. But we can get into all that. So that's the abbreviated version of my background. It's awesome in LA. I love getting to surf and hike and all this good stuff. So the hypothesis of wanting to come out here for better outdoor adventures and the great startup network has all been true so far.
Well, thank you very much, James. One of the obvious questions to start out is what personally inspired you to pursue a career in venture capital and entrepreneurship? And, how did you get your start in the industry, especially, you're still kind of close to that educational part of your life. Definitely. So maybe you can kind of elaborate on us and tell us the mindset.
Absolutely. Yeah. So I remember actually the first thing that I wanted to say with this question was I remember when Facebook was having its moment and I was in something like 6th or 7th grade, and I just had never seen something take hold of a generation's consciousness that quickly. Everyone wanted to sign up. We were pretending to be in college so we could sign up because everyone just had to be on this app. And I remember reading about Mark Zuckerberg, the founder at the time, and just seeing that he was some college kid and soon to be a dropout college kid. So it just showed me that really this is accessible for anyone at any time if you have a good enough idea and enough conviction and willingness to dive into it full time. So that was sort of the early genesis. And by the time I got to high school, I was reading about startups and learning about what that sort of looked like. And by that time, sort of Uber and other big companies had started to blossom. And it really, I guess a lot of people describe it as like a virus. Once you get the startup virus, you just want to do everything you can to be working with them or at them or investing in them, as I do. So by the time I got to college, it was, Airbnb and Dropbox and other startups began to take hold. And there was a huge infectious startup disease, not a disease, it was a good disease, but everyone at Harvard undergrad wanted to be doing something with startups. So I actually at the time had a couple of friends who went down the founder path. And with my, at the time, very limited skill set, I just wanted to get involved with whatever I could. So I was helping them sort of look at some of their financials and do some preliminary modeling there. I was helping put them in touch with investors because all that took was me reaching out to people over email or LinkedIn, which is, a thing that you do a lot in this job, this cold outreach. So you got to get comfortable with that if you want to build a career here. And I was really just trying to build up their customers. So I was emailing a bunch of random companies and trying to get them onboarded. And I ended up investing in a couple of those companies. So that was where I got that first taste of what it was like to actually have skin in the game, which is just so much more valuable to me, I think, than having, you know, a salary. You actually get to control the outcome of something, and your success is determined by how much effort you put in. So that was really meaningful to me. And so I started off doing investment banking, which is, I guess, a very preparation focused, broad-based skill set to get right out of college. And that was sort of a stepping stone to the investing roles. I think it's people do investment banking or consulting. That's like one of those sort of entry level roles that can prepare you for a number of different careers in private equity or venture capital, or working at a startup or founding a startup. So I think that was the trial by fire moment. And I wanted to get a job that I knew would be, I guess, preparing for fundamentals of business. And the job that I ended up getting right out of Citibank was with a private equity firm called Lee Equity, which I mentioned them before. So they'd never taken on an analyst before. So I was their first analyst hire. I managed to finesse my way in there as a really young guy. And the team took a bet on me, and it was, again, drinking from the fire hose, just learning from all the smart people around me and starting to make our first big investments. And we can talk more about those processes, but it was a long journey to get into this. And I think it's really just been so fulfilling to have made it, I guess, full time into this, because I knew not too long ago, very short while ago, actually, I was in your shoes trying to figure out the ways to break into this. So I guess it's still early in my career, but it's nice to have looked back and see this path that I've been on, but still very much a work in progress.
Thank you for the detailed answers. And I think they're so relevant to our student population, because we are talking how to develop these careers, what sort of mindset you need to be successful. And you're sharing a lot. And, as you're speaking, I have so many questions in so many directions, but I'll try to stay on track here, because you talked about networking and using those networking skills. And in doing so, you described that you may not have been the perfect candidate, but I think, again, it comes down to that mindset making you the perfect candidate and that networking. So maybe you can talk about some of the challenges that you went through, and did those challenges ever make you want to back out of your decision?
Yeah, I think the biggest challenge across all of this, and side note, I had a mentor who said something really powerful about challenges and sort of suffering. He said that there's no winners in the hierarchy of challenges. So everyone's got their own challenges. It's different for everyone. There's no point in sort of saying, I went through this, so I should deserve this, or he went through that, which was worse, so he or she should deserve that. So it's all relative. So I just wanted to say that. So I think if I were to say the biggest challenges is actually deciding where in this huge ecosystem makes the most sense for you to try to pursue a job in. So there's all these different sectors. You could work in media and telecom, you could work in entertainment, you could work in consumer internet, you could work in industrials and aerospace. So putting the forethought into which of those broad sector sort of areas you want to spend more time in, I think, is really important. The second is, what stage of the companies do you think is most interesting? Like, do you want to be at these companies that are, like I said at the start, just a couple of people and an idea that are, throwing stuff at the board and seeing what sticks, and really at that 0 to 1 phase, which to me is the most exciting. But I had to go through the later stage stuff to know that that was where I had the most personal resonance. So you could be working with companies that are about to make their initial public offering or about to be acquired by another sort of big tech company. That was the role in the investment banking thing. So there's a lot of different stage and sector concerns that I think the more forethought you can put into everything for the recruiting process and the preparedness that comes along with that, the better off you'll be. But the big challenge, I think, was actually in investment banking itself. It is a job where you're very much pushed to your limits. It's not like a life or death, I'm at war type of thing, but it did sometimes feel like you were in the trenches taking enemy fire from, your boss who's just giving you more work than you could possibly handle. So that was a time where you're pushed to your limits in a way that I think is very, relevant for the early stage path, being a founder or investor, where you're not getting told what to do and you sort of have to then craft your own journey. So it was incredibly time consuming work. Everything in my life, I guess suffered because of that. I wasn't getting good sleep, wasn't keeping fitness, lost touch with my friends, wasn't a good son or sibling or brother. So that was the time where you still just, despite all of that, need to maintain what is you. And it's really important to just never lose sight of that central identity and what you want to get out of something, even when everything's stacked against you, you're getting more work than you could possibly handle. You've no say over what you do. That was another challenging thing. It happens, and it's a very worthwhile thing to go through, where you don't have much volition or autonomy about where you spend your time. It's all just sort of given to you. So that was an adjustment. I knew I wasn't going to be someone who liked taking a lot of orders, so that's why I wanted to become someone who had a bit more autonomy in this type of role that I have now. But it was a very good thing to have gone through and gotten stronger because of it.
Very well said. And it's, I think the nature of the entrepreneurial mindset is you just kind of wrapped it up like, I don't want to take orders from anybody, but you also know, and I think it's important to highlight, is that when you do make the decision to get into whatever industry or sector it is, and especially working with investments as a career, is that you do have to, what we call, pay your dues, and you do have to put in a lot of work,
Big
and
time.
you do have to make sacrifices. And that's what you
Big
highlighted.
time.
And I think it's important for everyone to know that we do make sacrifices to do what it is that we want to do professionally. And you had said, just to start off, and I know the next question is going to really kind of get into more of the really 101 of this business lecture series, but just to give a little context, when you talk about investment banking and you going into investment banking, and investment banking really, if I sum it up correct, and please correct me or rephrase what I'm going to say, is investment banking is really like the backbone of many corporations. They lean on the banks to do their sort of their back end banking is to manage their finances. And so you're at the beck and call of these corporations. And so I could see how a boss who's getting yelled at, or not yelled at, I don't like to use that. I don't think anyone should be yelled at, but let's just say a boss that maybe you had as someone coming in was having pressure from a client, because that's what they are. The corporations are the clients, and then how that gets passed on to you, and maybe even touch on, like the corporate culture, you want to work in a culture where that's not as stressful, but it's almost like you have to experience that to know what it is you don't want to do. So with that, I know you could touch on some answers from that, but again, maybe you can work from investment banking on into the difference between private equity and venture capital, and how the strategies are different.
I like what you said a lot about paying your dues. That's the Spark Notes version of my long and wild answer, but it's so important, especially early in your career. You are going to have to do things that you don't want to do. You're going to have to spend time on things you don't want to spend time on. You're going to have to make huge sacrifices. And I alluded to some of those, but it's all in service of something greater. You just have to think about your career on a multiple decades time frame. Like, I'm still in my 20s. I think the 30s are where you really make your big dent, and I'm still in sort of the positioning phase for that. So I think, I very much resonate with that answer. But to answer your other question directly, investment banking, you are the outsourced brain for the finance and operations of the companies that you're working with. So, as an investment banker, CEOs, CFOs of big major corporations, we were working with companies like ADT and Microsoft and things like that. So everything from home security to computing and a lot of stuff in between. Our firm also worked on Uber's IPO at the time. So you're doing initial public offerings, which is helping companies that are mature and growing make their first equity offering to the public. So you and I can become shareholders on like a Robinhood type platform, things like that. They're also constantly looking, as these companies do, to position themselves better from a competitive perspective. So that means sometimes it's spinning up new product lines, which we help figure out whether it's a viable market to do. If they want to go, the company in the US wants to expand to England, we'll help them figure out whether that's a good idea. There's also all sorts of mergers and acquisitions activity, the M&A activity, which is where companies are buying smaller companies that might help their strategic position, or maybe they're buying a competitor because they know if they wait 5 years, then they'll be too expensive to buy. So they would rather just team up with them now. So there's a really wide scope of duties that you do as an investment banker. And that's why I think it's been sort of colloquially known as a preparation job for various different things in finance, whether it's going to work in real estate, going to work in private equity, venture capital, going to work at those companies themselves as someone in operations or sales. It's a very good sort of broad-based toolkit. And then private equity, broadly speaking, is companies working with companies that are already established. They already got, some degree of revenue, some degree of customers. And what happens in private equity, you acquire the majority stake of that business. So you raise a fund as the private equity firm, you pick the businesses that you want to buy, and you're buying the majority of them. Sometimes it's 51% of those businesses, sometimes it's 90 to 100%, but you also want to keep the management teams incentivized, so you want to keep some equity for them. And you also use leverage. I'm not sure how many of you are familiar with this. It's like leverage buyout. So you're not acquiring just with the funds that you've raised, you're also going and getting a loan to help with the acquisition, which is cheaper than using the money that you have, but then you have to use the cash that company's generating to pay down the loan, which is why the biggest exercise in private equity is building these financial models to look forward, look at the projections and see, are they going to have enough money to pay down this debt and to make me be able to make money as the investor on this company overall. So it's a lot of time meeting companies, it's a lot of time networking, spend a lot of time market researching, building the models behind your computer. And the fundamental thing that you ask when doing diligence for those types of companies is, you got to think, what can go wrong? Is there a risk that this company is not able to make their payments? Is there a risk that someone's going to come in and eat this company's market share? And I say that because when you come to venture, the earliest stages, it's easy to be a pessimist because these companies have no traction yet, right? There's no track record. There's no way to say how they're doing other than just looking at the people in the room. So you're asking in venture, as opposed to in private equity, what can go wrong? Here we ask, what can go right? So it's a much more optimistically oriented approach to investing. You don't take full majority stakes of businesses. We're only acquiring like 5 or 10% of these businesses at sort of seed and Series A financing rounds. And as I said, as I've alluded to, it's a lot of sort of EQ based decisions. Like, I'm meeting these founders. I'm asking myself, are they the right person to attract and retain a team? Is their vision, the right type of crazy that can be willed into existence in the world with the constraints and with the competitors in the field that they're trying to tackle? So it's been really fun. And I studied psychology as an undergrad in addition to economics. So get to channel all that people reading kind of stuff. It's really fun. But the uniting characteristics are, across both, you want to invest in companies that are sort of have a durable competitive position, have some sort of inflection point. Maybe they're going to use this new cash to go after a new market, build a new feature, hire some new people that are going to take them to the next level of their journey. And the analytical skill set that goes into all of this is important too, because you have to be able to understand their financial picture, their market competitive picture, and their future sort of vision picture as well.
Oh, that's a lot. It's a lot, but I also try to, I'm trying to make it accessible for everybody that's on here. So
Yes.
Really, a difference in private equity and venture capital is a venture capital. It all depends. They're both investing, right? They're both investments.
Yes.
But they're just at different stages of the life of a business. How's that? The life
100%.
cycle.
That's right. Yep.
Right. So the venture is the beginning, and the private equity is more toward would you say like a high growth or mature?
Definitely. I'd say more mature and stable growth is where private equity likes to come in, because if there's too much going on, then it's tough to make those financial models accurately.
Yeah. And when I say mature, for everyone out there, I'm talking about a business that's proven itself. It's
Right.
a proven business model. Venture is still, you hope it's a proven business model, but it could be very early in terms, depending on the sector, right? It could be depending on the
Definitely.
sector of business that it is. You don't know, because technology is everything now. And it really comes down to, and technology is changing. There's innovating very fast. You mentioned some keywords. We hear this, we hear it in the cool investment stratosphere. I'll put it at that. These series, right?
Yes.
Series. Can you talk a little, and I know it's not in here, but I know that you know what I'm talking about. These series of funding, rounds of funding. We hear these expressions. What do they mean?
Sure thing. So the real answer is it totally depends on the age or maturity of the company. It's not like you will automatically be assigned one of these series names based on where you are. It's really just how many times the company's raised money before. So the first round that a company raises is typically called the angel or pre-seed round, where it's a couple of folks who maybe know the industry well that this startup is trying to go after. They know the founder or something. They just want to support their friends, support this potentially big endeavor. That's the angel or pre-seed round. And you hear the term angel investors because that's what they do. They're coming in even before we do as seed stage investors, which is SEED, not the letter C, which comes later. But so essentially it goes angel, seed, SEED, and then there's these series rounds, which just go through the alphabet. So series A, B, C, D. Normally it was only those four, but now it goes all the way up to like F, G, H. I've seen a ton of series. So companies are raising more and more rounds of capital, and that's why you get later in the alphabet with those series names. So basically it's just a proxy for the number of financing rounds that company's had, or the number of times that they've raised money.
Thank you for providing. And I think with each round, there's some expectation attached to that funding, like, oh, with this round of funding, this company is going to expand here or do this or go into a market here, something like that.
That's a big thing that we do. So when we're looking at, for example, the Series A investment here at Fika, we have this whole database of companies, ideally in the same industry, because we try to be domain focused, but we know what 50 other companies look like when they reach this level of financing, the Series A level. So we can say, maybe they have more revenue growth, maybe they have slower revenue growth, maybe they have a bigger team, maybe they're doing more with a smaller team. So we're able to sort of map and match against the track records of other companies who are at similar stages at different points in time. That's the whole exercise. And that's why, having the information databases is very helpful.
Telling you, information is king, is it? So moving on to another question. I know we'll do the best we can. What are the sources of the investment capital? Because you're talking about, when you say, we are going to invest, or this company is going to invest, where is this money coming from?
Sure. So we both venture capital firms and private equity firms, they raise funds from what are called institutional limited partners. So a bunch of random words you don't need to know. Basically, we go to either rich people, endowments, education institutions with endowments, pension plans. So to make this more tangible, Fika has raised funds from California University State Pension Plan, which is like all the teachers and et cetera who pool their money in savings and retirements. We get money from them. We have several local celebrities in LA who want to get more exposure to venture capital, so they've invested with us. We have a couple other academic institutions, big corporations. They are not in the business of picking early stage investments, which is why they give us their money to do it basically for them. So that's where the money for the fundraising comes from. And it's another whole other exercise to, I guess, wheel and deal and network with those people to convince them why they should give you money versus someone else. And we can get into that if you want, but that's a whole other battle as opposed to picking companies, which is what I do most of.
I have so many questions, and I know we don't have time, so I'm going to keep it focused. But I think, would you say that show Billions would be a good place to figure some of this out?
Billions is a good one. So Billions is like all the rich people doing all their things in New York. That's one inspiration. Sure. I think my job, basically, if you guys are familiar, is I get to do Shark Tank style pitches all day. So I'm like to think of myself, maybe I'm a Mark Cuban type, maybe I'm the other guy who's less exciting, but I'm just getting to hear these amazing stories and ideas from founders all day. And then I get to decide whether we want to spend more time with them and learn more, and ultimately whether to invest or not. So that's my day to day.
Definitely more accessible for this body, Glendale Community College. Most of the students are very familiar with Shark Tank.
Great.
Love it, watch it. So, okay, we're just going to call you Mark Cuban then for today.
There we go. I'll take it.
Okay, so it sounds risky though. It sounds like a high risk business, but you can elaborate on that. We talked about the stages. maybe what signs that you look for that are positive and that what would deter you
Sure.
from investing, some of those outside of, I think you talked about the EQ, right? You said EQ?
Yes. Yep.
Anyway, outside of like the emotional stuff, more of the financial picture, what would you go, oh, that sounds good, or this is trending good, or this is bad. I don't want to touch this.
Right. So ultimately, it's a matter of looking at the efficiency of these businesses. If they are spending a ton of money on advertising and marketing and they're barely acquiring their customers or users, then that's inefficient to me. So I want to see that they're able to, acquire users at scale, generate cash, or basically make the users pay on some regular recurring basis, and that everything is happening at increasing scale. So maybe, in the case of a social media type of app where it's important to get your friends on there, if each person sends it to 5 people and all 5 of them join, that's a great sign. But if I send it to 5 people and only 1 joins, then I see it's not as viral as another type of company. But to zoom out, I guess the 3 key, pillars that I'm looking at when I'm trying to make these decisions are: number 1, the team; number 2, the market; and number 3, the product itself. So just to give you quickly on each of them, the team we've talked about, we want a strong group of founders who have all the experience that they are going to need, or at least know where they're going to need support. Because some people say, I know everything, I don't need any help. We don't want to invest in those people. We want the people who know where they're going to need to hire or need to find advisors like us to help make decisions. We also look for people who we say, this is the best person in the world to found this business. Maybe they've worked in a couple of similar industries. Maybe they just have special knowledge that they've accumulated over time. That's what we're looking for on the team perspective. On the market perspective, we want to find businesses that could be, tens of billions of dollars. And some sectors of certain markets just aren't that big. So we're doing all sorts of market sizing analyses to see if this company becomes as big as it can be, is that still big enough for us to be able to make money? Because maybe it's only, $5 or $10 million business, which is still a great outcome, but we want something that's north of $1 billion. We want those unicorns, So we're looking for something that doesn't have like a clear winner in an industry. Maybe there's, if we're looking at social media, like obviously Facebook and all those sort of similar companies, Twitter, have huge market share. So we're never going to take them down from their pedestals there. They're just going to be so entrenched and dominate that market. So maybe that's not a good area to invest in, for example. And then the product itself, odds are it's probably a problem space where someone's tried to build something before. So what about their approach? What about this company's approach is different or better or more efficient or faster or just a better experience for the customer? Like you think about Uber, it was just such a no-brainer that being able to order a car on demand is better than calling a cab company, trying to walk around in the rain. So that's what we're looking for. Something that's just a 10 times better solution for a given problem.
And what is a unicorn again?
Unicorn, yeah, there we go. Apologies. So unicorn is a term for a startup that's worth more than $1 billion. And that's the goal for all of these companies. We want them to be huge, and unicorns is what we want. So try to ride some unicorns.
I just have to say it because some students might go, why are they saying this word? And
yes, this is mythology and venture capital.
But understand, everybody here, if you hear the word unicorn, that's what James wants. He wants the unicorn.
Yes, I want the unicorns, all of them.
Because it's very profitable. At the end of the day, a lot of what we do in investing is about profitability. And I know that this has changed, and I do have to say this. It's also about, the social impact of what, do you guys take that into consideration? We don't really have that in the questions, but do you take the social impact of the business on society or the community or the environment? Do you look at that?
We look at that very closely. There are some firms who look at it even more closely than we do, that are, firms dedicated to investing in environmental technology or climate related technology, something with sustainability. Or we actually spend a good amount of time just to make it tangible. One example is we think there's a ton going on in fashion reselling. So secondhand goods, thrifted goods, that's a huge and growing market, and one that is much more environmentally sustainable than the companies that make a ton of clothing and have a ton of waste and output that is not desirable for the environment. So that's one way that we try to look through that. But it's definitely important. We're not looking for companies that have a sinister mission or trying to take advantage of people. You have to have the good of humanity in mind when you're trying to build a startup. And I think that we have that pretty high on our list at Fika as important criteria.
Do you, we've got like a few more minutes, maybe 3 more minutes of these questions. But I do want to touch, there's so much I want to ask, but I do want to maybe kind of skip down to speaking to the students that are here today. If they think what you're saying is very interesting to them and they're very excited about what you're saying or the line of work that you're in terms of finance and investing, is there anything that you can, what advice would you give the students who are interested in continuing this sort of career? You kind of alluded it at the beginning with your own personal journey, and maybe suggest how someone could enter the field of maybe what it is you're doing, maybe not at scale, but something similar.
Definitely. I'll give you my favorite teacher's advice from high school to start, and that is to start reading more 5 years ago, which is easier said than done. Obviously, you can't go back in time, but I think the more information you consume, the more knowledge that you try to acquire, the better off you're going to be for whatever you want to do. And to me, the fundamental of that is just reading. I've been reading as long as I can remember. It's been one of my favorite activities. So if you are that type of person, a bookworm, then I think you're much better positioned for everything that you'll do later in life. But the other thing I'd say to do is to think about a technical skill set that you want to build. That's sort of the most in-demand type of skill set. It's like you can say you're good at making decisions or you're good at evaluating people, but it's very hard to prove that. So I think from a financial modeling perspective, from a computer programming perspective, those are the types of hard skills, tangible skills that are very important. And another, on the softer skill side, networking is of critical importance. The more people you know, the more opportunities you're going to have. Another saying that I like, and I guess I'm full of these fortune cookie type sayings today, but always be connecting dots. So A, B, C, D, that's very important. And the more opportunity you have is going to come from the people that are bringing those opportunities to you. So you just want to cast a hugely wide net of opportunities by building relationships with people, and hopefully they'll bring things to you. But to talk about the recruiting process itself, if that's something that you want me to go into, Sophia, you let me know.
Sure, absolutely. We do have time. I just want to alert everybody that I think Eleni will be posting the sign-in sheet in the chat. I know some students have been sending me a message directly, so I just want to say that's going to be in the chat, and we're just going to continue on with our conversation. And if you do have a question for James, please send it to Raj and he will send it to me. Thank you. Yes, and the recruiting process. Let's continue.
Yes. So for investment banking, which is sort of the entry level type of job for all of this stuff, I think it's very important to start educating yourself on what it looks like. So starting with, maybe you could ask one of these generative AI chatbots, what is investment banking? And it would give you a whole big answer about what the day-to-day looks like, what the process of recruiting for it looks like. And I can follow up. I have a couple of sort of resources and guides that were very useful to me. I can sort of follow up via email if that'd be useful. But the more you can familiarize yourself with what the job looks like, the better you're going to be able to prepare for the interviews. So that's one aspect, the getting to know the process of the job. We talked about networking. I think in the context of this, reaching out to people that you know who may be doing the job. Now you know me, I've done the job, I can put you in touch with people, so feel free to reach out. Maybe there's alumni from your school, people from your hometown, some family friends. You're going to have to be reaching out to people you don't know in all these jobs. So the more comfortable you can be with that, and just say, hey, I want to learn from you. I want to be connected here. I want to understand what it's like to be in your shoes. You can tell people like to talk. I like to talk. Everyone likes to talk about themselves. So if you give someone an opportunity to talk about themselves, they'll probably take it. And as you're reading the news, as you're thinking about what it looks like to work in this industry, don't just consume the knowledge. You got to think about why. So in the context of banking, it's like you're reading this article, right? It says this company got bought. You got to think about why did Microsoft buy this company? Why did Facebook buy this company? What's their rationale? What's the strategic angle here? What's exciting about what this company is doing relative to other companies in the space? So getting to that why and figuring out how you can ask those deeper questions is a really important exercise. And these jobs are given by recruiters who work for the Citibanks and Goldman Sachs, all those big investment banking. So if you can get a direct line in with one of those recruiters, that'd be really important because they're the ones who will be able to get you an interview. So I'm sure they have local recruiters in the LA area, all these investment banks. So you can find the contact information for them. Maybe they're hosting some sort of networking event. Make sure you're there. It doesn't even have to be for your school. I went to networking events that weren't from my school just for the sake of meeting recruiters. So like maybe USC has one. Maybe you can go over there and meet the recruiter for an investment bank there. Just get yourself in front of these people by all means possible, whether it's via email, via LinkedIn. Maybe you can tweet about them. I don't even know. Just get yourself in front of them and make yourself known. That's the best action here.
Thank you. I like what you're saying, because what it says is that you really don't know where your opportunity is going to come unless you jump in, or I have to keep trying to use the words that are more accessible. So
Yeah.
if you take the opportunities to attend any sort of event, even as James just mentioned, which we use the term crash, which means attend something that you're not invited to, but you go anyway, and you start meeting people, you might have an opportunity there just by meeting somebody, right?
Yes, indeed. Big
Okay.
time.
So we're going to get to some of the questions from our audience. And the first one, I think this is a good one. Oh, this was maybe you can get this one. If you had an idea, James, you had an idea, because you're always vetting ideas. If you had an idea, how would you go about pitching it to yourself, to a VC, because you are a VC?
Yeah, I think the best way to think about ideas is to think about problems that are not well solved. So if you think about some problem that a worker needs to deal with every day, something that is critical to their job, something that they literally cannot live unless this aspect is done well, those are the types of problems that I would be trying to solve. So I would orient around what are these mission critical, hair on fire, I need to figure this out, otherwise I can't do anything. Those are the way I'd sort of orient towards problem solving. And if that problem's big enough, to go back to that market size question, then it's going to be exciting for someone like me to hear it. If it's a huge unsolved problem with not a lot of good other options for solving it, and a team that really has personal resonance or personal experience in dealing with that problem, that's I think what I would try to frame it if I were on the other side of the table. And you also have to think, what does it take to build one of these companies? Am I going to need to find someone who, I'm not a computer programmer, so I would definitely need this. Am I going to need to find a computer programmer co-founder to come on this journey with me? So at this stage, as I keep saying, and as I hope has been a theme, it's all about the people. So if you can surround yourself with an all-star team of people who are willing to attack this problem, willing to work all day and all night to build the best solution for it, then that I think is what is most appealing to the venture capitalists.
Well, it's a good segue to this question that was sent to me directly by one of our attendees today. And it says, how do you find engineers when starting? I mean, that's the kind of questions. How do you just mentioned those sorts of roles of people that are tech, engineer, savvy. How do you find these individuals?
Yeah,
and were you one yourself?
I was not. So I studied economics and psychology. I never took a computer science class until after college, when I realized that I should have, and I went online and I did it myself. So there's ways to build these skill sets, on YouTube or Course Academy or any sort of Khan Academy or any of those types of online resources. But the best way to meet people is coming back to our favorite word, networking. I think being in the university or academic ecosystem, you just get to meet so many more people. If you think about it, when you graduate, you're never going to make that many friends at once at any given time. Like, yeah, you'll have your team at work. Maybe it'll be 10, 50, 100 people, but how big is your school? You have tens of thousands of people there that are just looking to make connections, looking to build their network. Everyone wants to have, people that complement their own skill sets. So an engineer is going to want someone who has a business mindset because they have no idea what starting a business looks like. So if you can have that business side and you find someone with the technical side, it's like a match made in heaven, right? It's just that's the right pairing. So maybe it's going to I don't know if your school has this, but some sort of computer department, engineering department, and talking to the professors, seeing if there's some top students that maybe look like they could be startup founders or entrepreneurs, and just going to meet them, going for a coffee, going for a walk, talking about life. And I think you don't even need to talk about your business to start. You need to make sure you get along with that person. So just make sure you can be their friend. Make sure it's someone you can spend a lot of late nights and long weekends with, just being with them. And then you can figure out the business itself.
Great answer. And I think that we do have some of those people in this here attending. I know there are some of those sort of tech, I don't know, I call them tech wizards. And we do have both computer science and engineering at Glendale Community College. So there are a lot of questions coming in. Some of them sort of have been answered. Some, again, some of like, what do you look for? Okay, this is maybe a flip on this question. It says, as a GCC student now, what should I focus on to build myself into the best entrepreneur? So I can appeal to VCs, but I think it's really like those characteristics you're looking for.
Yeah, that's right. I think there's no one size fits all journey. There's no advice that I could give that would apply to everyone. And I think it's just about building your unique skill set and unique perspective that makes you differentiated. I don't want to be able to, if you're coming to me and pitching a company and 20, 30, 40, 50 different people could pitch the same thing with the same excitement, with the same intuition about the problem, then it's not going to be exciting. So the more you can make yourself unique, the better. And that comes back to what we were talking about before, about figuring out which industry you want to build in. Maybe it's something in social media, maybe it's something in e-commerce, maybe it's something in aerospace, maybe you want to go to the moon. Whatever that is, just consume as much information as possible, read about it, talk to people about it, and just build your own unique perspective. That's what we're looking for. Honestly, you could say above all else, it's like a unique and differentiated perspective. So the more you can think about building that for yourself, the better off you'll be.
Great answer. Thank you. Okay, this is an interesting question. Maybe you can answer it. It says, what are the factors that go into determining whether smaller VCs can get in on deals of larger VCs? And again, everybody, venture capital, this is investing at the beginning stages of a company.
This is a really good question. And my firm, Fika, is by no means a well-known firm yet. Hopefully we grow into that. We're only 5 years old. So some of these venture capital firms have been around for 20, 30, 40 years. Sequoia, Andreessen Horowitz, Excel, General Catalyst, maybe some of these you've heard of. But so if a founder hears that one of those big names is interested, how the hell is Fika going to be able to carve out their slot? And that's where the relationships matter most. So we actually just had this happen. We were looking at a company, a startup that many of those big VCs were looking at. So we just had to be better at building the relationship with the founders. We flew ourselves to Vegas. We flew ourselves to New York. We got as much FaceTime with these guys as possible. And because those are big firms with a million things going on, it's tough for them to give that individualized attention to each startup. So that's why being small has its advantages, because you can tailor your time, tailor your attention better, and provide that one-to-one sort of relationship that a lot of those bigger firms can't. But ultimately, it's who you are as a person. These founders, like I said about, figuring out who you want to go into business with as a co-founder, these founders know that they're going to be spending long nights and weekends with us as well. So if they don't like you as a person, it's going to be hard to make a deal and to win a deal. So, you can't just be a worker. Like I've talked about it. I love surfing. I play some guitar. I have some music on Spotify. Like you got to have other things to talk about. You can't just be this one-dimensional person, because, that's what people try to avoid. They don't want just some robot. They want a human to work with. And I try to be a human as much as possible.
I keep muting and unmuting myself. Thank you. Good. I mean, but there's a lot of questions, but I know that our chairperson wants to directly ask you a question. That's
Let's do it.
Andre. And Andre, if you want to unmute and ask your
Yeah.
question, please go right
Yeah,
ahead.
yes, certainly. So James, yeah, I know this is a little bit early. I know you touched on investment banking and just the demand, how demanding it can be for an analyst or an associate. I've often thought about it a lot personally. My mentor, my boss, my colleagues. I work at a boutique firm, private equity firm here in Glendale, and they've always told me, "Don't go into IB, don't go into IB." And I'm just curious. I know that the buy side is, seen as a very lucrative pathway to many people looking to go into finance. I was wondering, aside from investment banking, are there any alternative pathways to reaching VC, private equity, hedge funds, just the buy side overall? If so, like what roadblocks might a professional face? And yeah, that's pretty much it's something I've been asking myself a lot lately.
Good questions, really good questions. Yeah. So investment banking has been for a long time what people say to go into because it just keeps your options open. You can go into so many different things working in investment banking. And that's why it's like that first thing that a lot of people do right out of college. Something else that's similar in terms of that preparation type of role is consulting. And a lot of people who end up in private equity and venture capital were working as consultants. And what consultants do, to the extent you guys aren't familiar, is very similar in a sense to the banking scope of duties, but it's less quantitative. So if you're not as much of you do a lot of numbers, but if you're not as much of a financial modeling type of person, you can go work on bigger picture types of projects with a consulting firm. And those are hired by the same types of businesses that hire investment banks, like the Microsofts and Ubers and Amazons of the world. They hire consultants to figure out, how can I make my business better? Again, similar questions. Should I enter this market? Should I build this new product? What type of person should I bring in? Like, is this team functioning the right way? As a consultant, those are the types of problems that you get to work on. And between investment banking and consulting, both of them place incredibly well, meaning you can get a job in private equity or venture quite easily from either of those roles. But another thing to say quickly is working at a startup as a sales rep, as someone who builds product, just any sort of startup job that you can get makes you a better investor because you know what it's like on the inside. You're able to say that team looks like it's functioning like the days that I was working at a startup or something like that. You just know you have a whole different dimension of being able to relate to the founders. We call that founder empathy, being able to just understand their problems, understand what they're going through. And I haven't done that. So I've never been a startup employee. So you could argue that I have no idea what I'm talking about when it comes to me giving these founders advice, but because I haven't been there, done that the same way that they have. But me coming from the later stages of the world, I know where those companies are supposed to grow to, and they love the fact that I've seen companies, become billion-dollar companies before. So that's the advice that I'm able to give. So to recap, startup jobs, consulting, those are two very good alternatives to investment banking if you want to be working in venture capital.
Thank you, James. I know that helps a lot. Thank you.
Of course.
Thank you. I know we're gonna have to wrap up soon, and I just have some really, if you could just comment on these two things really quick, because I keep getting a lot of questions on them, and I actually have it myself. Inflation and rising interest rates, right? And AI. If you could comment on those two for your industry and what you're doing really quick, many of us would appreciate that.
Sure. So the way I think about interest rates, so if interest rates are higher as they are now, then I can put my money in a bank and know that it's going to earn 5, 6, 7% safely, quote unquote. So that idea, that mentality affects the entire investor ecosystem and makes people a lot more, I guess, risk averse, meaning I don't want to take as many risks because I can just give my money to the bank and earn that rate of return on it. When interest rates are low, which is what we saw over the past few years during the COVID years when markets were going crazy, there were so many venture capital financings happen. That's because I go to that bank, I'm thinking in higher rates, I can earn 5, 6, 7%. Right now, you're telling me I can earn 0 or 1%. I need to find other ways to earn money. So that's why all the deal making was happening in the venture capital world. it's like, I have no idea where I'm going to do this. I might as well give it to the startup, which has a huge potential to be a huge return. So that's the inflation one. And I was an econ major, so I could go a lot deeper than that, but I'll keep it at that. The AI realm, I say this a lot. I'm so happy to be working in venture during what I believe is another technological revolution, the same way that internet was, the same way that mobile was, the same way that social was. So this is really going to be a huge shift for everything. We're still looking at ways to make investments in it. We look at 10 different generative AI companies a day. I just came from a call with one. So it's ultimately figuring out what are the ways that this company is going to be able to be defensible over time when Microsoft and Google and all these other big companies are doing their own generative AI work. So I'm excited to see what happens. It's going to be a big technological shift. I hope you guys are all playing around with the tools. That's another big tip. So spend as much time as possible just figuring stuff out, playing around, building some stupid games or whatever you think is fun. Just spend time doing it, because before you know it, you'll be working a full-time job and you won't have time to mess around. So I'm very scared that I'm going to turn into my parents who don't know how to use Facebook or Instagram because you guys are spending much more time with these generative tools. I can't let that happen. So if you have any good tips, please let me know. But just be a tinkerer, keep playing around.
Well, I think it's funny that you say that, because eventually is Fika investing in tech, in some sort of tech, right? So
Always,
what
yep.
if it got to the point where the tech was so sophisticated that was being presented to Fika that you were like, what are you guys presenting me? I don't even understand.
Yeah, well, hopefully that doesn't happen, but it very much could.
Oh, yes. Thank you for commenting on that. And thank you for explaining how interest rates affect investment decisions, because, some people wanted the returns of a bull market, which is, the bull horns go up. So that means a rising market. But now that it has not been that, where do we put our money? And maybe a venture capital investment might be
Exactly
an answer, right?
The same thing with crypto, right?
Please
That's why people were investing in crypto during the low interest rate days. And that's why these days with rising rates, people are like, why would I do that? It seems unsafe. There's still a much safer way for me to make money than try to invest in the next, blockchain type of project. So anyway, any other questions?
Yeah, we could do another hour on crypto alone, probably.
We could.
But I want to thank you. I want to thank you, James, for taking the time out of your busy day and shedding some light on these important topics on private equity and venture capital for our student community at Glendale Community College. We appreciate your valuable experience shared with us today. And now I will pass the virtual mic to our business club for some parting words and information on upcoming events and how to join the business club. Thank you all for joining us today. It was my honor.
Thank you all so much.
Yeah. So me and Nicole would just like to express our thanks to our speaker. Thank you, James, for joining us today. It was an extremely enriching lecture we've had. I still have a ton of questions, of course, as always, but I'm sure, a lot of our members, a lot of our attendees received some valuable insights. Nicole?
Yes, thank you so much to everybody who joined us today, including our GCC faculty, students, business club members, and a big special thank you to the GCC Business Division for working with us to bring this event to life, as well as a very special thank you to our speaker, James, as well as our GCC Business Club Executive Board who helped to power this event. So once again, if you're interested in joining Business Club, please just send me your name, GCC ID number, and GCC email address, and follow @BusinessGCC on Instagram to stay updated on events and opportunities. I also have a very exciting announcement about an opportunity open to all GCC students here today. So if you would like a professional headshot to use for your LinkedIn, business, or email, we have just the thing for you. So on Thursday, May 25th, between 1:40 and 3:30 p.m., we are offering a professional headshot service for free in collaboration with the GCC Photography Club. So please come down to SG 345 San Gabriel Building, which is the GCC Photography Studio, to get your photo taken. So Eleni will paste the sign up link in the chat. So if you're interested, this is a very valuable opportunity and I encourage everybody to participate. And one last thing, Business Club will be opening up our executive board member applications for next year very soon. So stay tuned for that. If you're interested in taking on a leadership position here at GCC, especially in a business related organization, this is definitely your chance to apply. So stay tuned for the application link, which will be sent to all members on our email list, and it will also be posted on our Instagram. So thank you once again. And I would like to pass it to Andre for one last event promotion, which is coming up next week.
Yeah, guys, I hope not to take too much of your time. I just wanted to let you know that we're continuing the conversation here. So it was fantastic today. Next Thursday, we will be hosting a fireside chat with an associate from Ocean View Capital Partners, a evergreen private equity firm based here in Glendale, Daniel Bustos, an associate there. So it's going to be me and Nicole, your president, as the co-moderators. We're going to be engaging in a very interactive chat. Danny, he's a GCC alum, so he's going to provide us with his perspective on things, his route, also having done investment banking, finding himself in private equity now. So we've gained some valuable insights from James here today, and we'll continue it in person. James, of course, I know you're extremely busy, but it's open to everyone. It'll be from 4:30 to 6 p.m. at Frider Hall over at GCC, of course, Thursday, May 25th. So there's going to be a lecture component. It'll be more of an open discussion. So if the audience ever has any questions at all, they'll simply raise their hands and chip in. But there's going to be networking, there's going to be food, drinks, and that lecture component, like I mentioned. So Q&A and all of that stuff. So that'll be our last event of the semester. And then, before that event, we'll obviously have those headshots. So last event of the semester. And yeah, we hope to see all of you guys there. We hope to make it a big event where everyone can get a lot of benefit from networking and the education they receive. So if you have any questions at all, please reach out to us about the event or applications, anything else, etc. And thank you so much for joining us. Thank you, James. Thank you, Professor Poseidon. Thank you, everyone.
Thank you, everyone. Finally, I'm getting a lot of questions. James, can people visit your profile at LinkedIn?
Yeah. I
Okay,
think
great.
you guys did a very nice production. Feel free to reach out. I think you'll have information, but happy to be a resource in any way possible.
Okay, students, you heard that. You can check out James on LinkedIn, James Shecter on LinkedIn.
Yes, indeed.
Thank you so much, everybody. Okay, everybody go to class. We'll stay
Take
on
care.
for a little bit. We'll stay on for a little bit, but everyone else, you guys
Thank you.
all have to go to class and do your homework.
Thank you.
Thank you, everyone. Great. Okay.